Hey, what's up, champions? Welcome back to the channel. Today, we're diving deep into a topic that's been making waves in the auto industry: negative equity on auto loans. Strap in because we're about to uncover the truth and give you some expert tips to navigate this treacherous terrain. All right, let's break it down. Negative equity is like quicksand for your finances. It's when you owe more on your car than it's actually worth. Imagine buying a car for $20,000 and then finding out it's only worth $12,500. That's a whopping $7,500 in negative equity, and it's a nightmare you don't want to be caught in. So why are we seeing a surge in negative equity? Well, it's a perfect storm of factors hitting the auto industry right now. First up, we have the infamous chip shortage and supply chain issues. These hurdles have caused new car prices to skyrocket, and the impact is felt throughout the market. But guess what? The bubble eventually burst, and used car prices started plummeting. It was like watching a car crash in slow motion. Those who had recently bought cars found themselves sitting on vehicles that were depreciating faster than ever before. Talk about a gut punch. As if inflated car prices weren't enough, we have rising interest rates coming at us like a freight train. The Federal Reserve decided to tackle inflation head on and started hiking up interest rates. That means borrowers not only had to deal with exorbitant car prices, but also face higher interest rates on their loans. Ouch! And if all that wasn't enough, living costs are skyrocketing. Inflation is eating away at our wallets, making it harder to make extra payments on our loans. With utilities, food, and other expenses taking a bigger chunk out of our budgets, it's no wonder people are drowning in negative equity. Now here's the cold, hard truth. Auto loan delinquency rates are through the roof. Seriously, it's the highest we've seen in over 15 years. Lenders are panicking, my friends. They can't ignore this negative equity surge. With borrowers drowning in debt, they're tightening up their lending guidelines and becoming more cautious about who they give auto loans to. The game is changing, and you need to be prepared. As you've just heard, the situation is dire. Negative equity is on the rise, and it's crucial to take action. But don't worry, we're not leaving you hanging. We've brought in some experts to share their insights and strategies for tackling this issue head on. First up, let's talk about refinancing. If you find yourself trapped in negative equity, refinancing can be a lifesaver. By securing a lower interest rate or shortening the loan term, you can escape the clutches of negative equity faster than you think. It's time to take control of your finances. Now let's talk about trading in your car. This can be a tricky move, especially when you're dealing with negative equity. Rolling over that negative equity into a new loan can land you in an even deeper hole. It's a cycle you want to avoid at all costs. Hold on tight. Before you jump into trading in your car, consider this. Holding onto your vehicle might be the smarter move. Take care of it, make necessary repairs, and drive it into the ground. By avoiding another loan, you can escape the clutches of negative equity and come out on top. So, what's on the horizon for negative equity? Well, my friends, we can expect some bumps along the way. Used car prices are still on a roller coaster, interest rates keep climbing, and supply chain issues persist. It's a wild ride, but with knowledge and proactive decision making, you can navigate through this storm. Stay informed, stay proactive, and make smart financial decisions. Negative equity may seem like an insurmountable challenge, but with the right strategies, you can overcome it. Remember, you have the power to take control of your finances and steer your way towards a brighter future. All right, my financial warriors, that's a wrap for today's video. I hope you found this deep dive into the world of negative equity helpful. If you did, don't forget to smash that like button and subscribe to the channel for more money-saving content. As always, I'll catch you in the next one.